Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over those speckles of red and green across the crypto bubble charts. I did mention yesterday that we were likely to see some profit taking, maybe a little bit of pullback into the PCE data, which should be very important. The market would just kind of have a little pause. And so you are seeing pretty much 50-50 here as the market, just takes a little bit of profit off the top, but isn't 100% concerned or anything like that. What we can see, of course, is the PCE data itself, which is showing some neutral kind of conditions here, where we do see the PCE price index did increase by zero point 0.1, right? This is basically a measure of inflation. It impacts us because this is the primary tool that Jerome Powell and the Fed use to determine how much they should increase rates by. And if we do see, and of course, higher rates increased by the Fed would hurt the market. But we do see that since it's only zero point 0.1, it's pretty much in line with the last reading. The Fed would want that to actually go down, but zero point 0.1 is not terrible. The core PCE is a little bit higher than last time, but in line with expectations. In other words, the market pretty much has absorbed this already. So it's not going to wobble the market that we got this reading. The PCE year over year is good, so it's about 10% slower increase than previous year. But of course, we are still increasing at 5%, which the Fed wants to get to 2 to 3% at most, right? And so this is still a little bit out of range and does suggest that the Fed has a lot of work to do. Same thing with the core PCE, which of course is the primary measure that the Fed is going to be looking at. Yes, it came down significantly year over year, but again, month over month, it's a little bit up. And so, the Fed can interpret this pretty much any way that they want, and I'll just say that it's basically a neutral reading, okay, guys? Especially that it's in line with the expectations of the market. That means that it's already priced in the exact same number. So the market got it right. Real disposable income did increase by 2.5%. That is a slower rate of inflation, a wage inflation, or pardon me, disposable income inflation than the previous 2.7%. So that's coming down a little bit. Consumer spending did drop significantly, and I would suggest that we're probably in a real recession now, guys. We were talking about a technical recession a year ago, and because during the virus era, there were different shipping issues, and ports got stacked, and certain goods didn't go out, and so this month or that month, this quarter or that quarter could be off. But now we're starting to see that, yeah, there is something real there for real. And, probably this winter we've entered a real recession, at least in my mind. And we can see that consumers are starting to protect their bottom line, right? They're starting to worry about it. And so they're not spending as much. And December tends to be a robust spending month. So this is indicative of people being aware that there may be a recession coming up, and then these things can become self-fulfilling prophecies, right? Guys, the University of Michigan still has to release their sentiment index and their one-year inflation expectations. The market may be waiting for this. There is no expectation. They're just going to give a reading, but if it's in line with 4% or lower, that would be good for the market. If it's above 4%, that could be kind of a knock against the market, especially since we see the PCE coming down year over year. If there was a one-year inflation increase, from the previous measure, that wouldn't look good. I think I can just refresh to see if they updated it, and no, they didn't. So let's just move on from there. You can see that we also have some pending home sales, to look for, but we already talked about real estate last episode. Let's get straight to the charts. We can see that we are under that critical level of 23,000, but just barely. So we are just playing with our EMAs here on the 4 hour, still pretty much the same position that I was talking to you last episode. And if we do just throw on some type of a pattern structure here, you can see we're just very much in a very clear little micro channel there. And part of our bigger channel between 18 and a half thousand and 25,000. Not sure why TradingView is blinking. But guys, we did have this kind of rising wedge over here, which did fulfill its measured move, and then it actually fulfilled its failed measured move to the upside. So this was a little bit of a fake out that got a lot of people a little bit bamboozled as Bitcoin just pushed hugely to the upside. And could we get a little bit more of bamboozling going on in the market out of this PCE data reading? Perhaps yes, because we could see the market just come down, grab some of this liquidity, and then push on up. Or we could see a push to the upside, and then we start to work our way down. As yesterday we were talking about the bearish divergences that were starting to build up on the chart here. Guys, I think we can just take a look at those divergences really quick. You can see just this is kind of playing out here. And if we jump to the 6 hour, we also see a little bit of a divergence here, which is what's pulling us down right now. So let's go to the 1 hour to see if there's anything. Not really seeing anything too clearly on the 1 hour in our current area right up here. So basically the same stuff that we saw on the 4 hour and the 6 hour is what's playing out. Let's go ahead and do our alpha momentum pool for the 4 hour, and we can see if we do have any tradable setup here. And in fact, really, really tight range this time. So let's see, where's best to take a look at this thing? Okay, let's see. Let's move that up there. Yep. Okay. So, guys, you can see that if we are above 23,086, that we will be on top of our momentum pool, and that should allow us to launch to the upside. So basically, that little formation that I was showing you over here, right? We should be able to, try to get to this diagonal, or perhaps even break out. Should we get above 23,086. However, we are not on that side of the alpha momentum pool. We are on the underside of the alpha momentum pool. So in that regard, I would say that we actually have to recapture 22,978 first. And we are below the volatility pivot, so we could still have random volatility spikes to the downside so long as we are underneath that critical level of $23,040. And then for your your indicators, probably general continuation to the upside looks about 23,065. But just to play it safe, by my strategy, I would go with the 23,086 before getting into any type of long position. We will be coming from the underside should we break north of this, passing through the volatility pivot and the general continuation and the additive and subtractive momentum. And so that is a possible long scenario for me. I do like those type of setups. Should we come from the bottom and push up, that would be an incredible show of strength, and I would expect that to continue. However, since we are just postured underneath the alpha momentum pool, yesterday I was talking about on the 6 hour that there was a shorting opportunity. And let's see if I can let's just take off the 4 hour. Let's throw on the 6 hour levels that I had given you. Yep, we were right here, somewhere around here on the 6 hour. Maybe it was over here. and we basically had a shorting opportunity, and so that did continue to drive down. We recovered much of it after grabbing this liquidity, but we're still working our way down. Again, I'm showing you the 6-hour right now. We were never able to capture on top of the key levels that we needed to capture on top of the 6-hour. But look, we've come all the way down and retested the volatility pivot on the 6-hour. So that's just interesting. We're not working on the 6-hour right now. We're looking at the 4-hour. And so this is the setup that we're looking at here. The 4-hour does close in an hour and a half. So, after posting that, this is going to be the closest trade that we get. And I would just say that we're suppressed right now. In fact, on the RSI and some of these indicators, we're going to actually lose the top half of the indicator should we cross below 22,805. So that is a number to watch out for, because your indicator traders are going to start turning a bit bearish should we drop under 22,805. However, above that, we still have the potential to re-enter the bullish control zone. And so again, just a 22,978 is just a minimum that we need to do just to look okay. And we do need to get above that 23,040 for any chance of volatility pivot to the upside. And then again, of course, for the long 2386. Guys, you can see our EMAs are kind of crunching over here, and it just it's about to lose the 21 on the 4-hour. So pay attention to that also. You can just see if it loses the 21 EMA, then maybe it could come all the way down to 22,687. If this is a bit of a fake out play, then maybe it holds on to 22,805. But this thing could continue to squeeze down, 22.3 maybe, even lower if we really do have some type of a tip over on this. But in contrast to that, if we do jump over to the daily chart, then we can see. Let me just change the time frame. And you can see that we do have a very narrow alpha momentum pool, and we are sitting pretty okay on top of the 4 EMA, and we really just tagged the 9 EMA on the daily. Neither of those things is bearish, okay? Like, I wouldn't get bearish on this chart setup on the daily unless we broke underneath 21,125, essentially losing that 200 day EMA, as well as getting squeezed, by the 9 and the 21 to the downside, which can be quite powerful should we lose 21,000. However, in general, I would like to maintain 50% of this move here. So let's just take something from wick to wick. And yeah, we could come down to the golden pocket, 21,650. No skin off our back, just kind of wick there and then bounce back up. But safer is above this $22,000 area where we get a little bit more of a bullish bounce. Guys, I think that we are underneath the momentum pool here for the day. So just like the 4-hour, it's not really looking that great, okay? But we already got the drop and then a nice bounce. So this is being bought up, and you can't fade that. It got bought all the way back up to the 4 EMA, almost to the dollar. So somebody is very bullish, and just keeping this thing, keeps bringing this thing back above the 4. It's nice to be above the 9 EMA, but to be above the 4 is incredibly bullish. So we do have a significant buffer room here. But to just continue on our way bullishly, we will need to capture 23,010. Okay, so very similar to the 4-hour, but that's just going to hold our momentum, this kind of sideways action that we've had in this kind of alpha momentum pool that has been just running through this area. In order to get pumps to the upside, we really need to see 23,465 by the close of the day in about 9.5 hours, somewhere in that 23, mid $23,000 area, depending on which reading you're going by. Let's go ahead and jump to the 3-day, because the 3-day also closes in 9.5 hours along with the daily. So we can see that, of course, we are just skirting the top of the hold momentum line for the 3-day. And so this looks actually quite nice. There's nothing wrong with this, except that the 89 EMA is pretty difficult to break through. We got rejected by it once, twice, three times, pretty strongly. But we're still holding our momentum on the 3-day. So if we close in this neighborhood anywhere above 22,636, that will be a pretty strong showing by the 3-day measurement. And I would suggest that, yeah, we could have a check back on those lower time frames. But overall, this thing is just very bullish. And the volatility pivot is down here at 21,900 and 18. So we have even a little bit more wiggle room than that. If we just have a volatility push, it could take us to the upside to that 25,000, maybe even 26,000. Who knows? We could get another kind of wave spike before we end up doing a retrace. We don't have to retrace right now. The market positioned itself to be ready to do a retrace just in case the PCE data was bad, but the PCE data was neutral. So we do have to be on our toes because it could still come down. But neutral is more in favor of continuation, and continuation for the 3-day chart would be to the upside, even if the 4-hour and the daily have a little bit of a pullback. The 3-day is suggesting to continue with the general continuation line all the way down at 20,231, and we don't lose significant chunks of momentum until we're underneath that $20,000 area, which makes sense. It's kind of this midline in this little zone back here, so we do have significant support underneath us, guys. I believe that's going to be it for my daily analyses of Bitcoin. Let's go ahead and just take a look at our volatility for some of these time frames here. We can see that the 3-day is starting to come to a close. That you can see that we do have this little bit of a pinch that's about to come up. So just like what we were talking about on the 2-day, yeah, maybe there's one more drive up, but this thing looks like it's going to come to an end pretty soon. Let's look at the 5-day. Well, 5-day may want to keep going. That's interesting. Let's look at the weekly. Wow, the weekly is also quite expansive. The 2-week is where things were pinching off. So 2-week and above, very concerned. But hey, the weekly, the 5-day, the 3-day are still open-minded, even though the 2-day clearly has been overheated. The daily is overheated and actually in contraction as we've been going sideways for a few days. That's why we've been going sideways, is actually because the daily has been so overheated. And you can see when this pinches shut on the daily, that's probably when the 3, 5, and weekly are going to get their last couple pushes to the upside. So we do have to wait for the daily. And then let's go ahead and see what the 4-hour is doing. And the 4-hour wants to be a mystery. Okay. So TradingView still being weird. That's the daily. Let's go back. There we go. The 4-hour. Okay, so the 4-hour is in a consolidation phase. Okay, so basically sideways or down is how I would interpret that, because we have been pushing up just so hard that yeah, this 4-hour is very weird actually. Look at the 6-hour. Yeah, similar structure. Anyway, I think we can just ignore the 4-hour. It's not as significant as it necessarily would lead us to believe in the past. I do believe that we are now operating on the daily, the 2-day, the 3-day, the 5-day, and the weekly. And basically, we are bookmarked by the volatility on the 2-week and the perhaps even the 4-hour, which just is a bit choppy. So really, I'm going to be looking for the 5-day and for the weekly to finish their moves. And then that's when I would suspect that we are probably going to get a bigger pullback. It just looks like these things are not ready for that yet. And yes, we have lots of overheated indications. Yes, This RSI is looking like it's, crossing its EMA. It looks like it's, diverging, bearishly. And yes, we could get a pullback, but it doesn't necessarily mean that this, move to the upside is over yet. And so I would not necessarily be over bearish right now. We could end up just getting a higher low, sort of like this right here, if we get anything low at all. And then that might just be what boost us to another push up, sort of like what we did over here, right? We made a higher low, we had a pretty good pullback, higher low, pushed up, pullback, pushed up, pullback, pushed up, pullback, pushed up, right? We're starting to get into that same area where we had this, one drive, two drive, three drives up, and we've basically had, in line with that, one drive, two drives, and if we're using the same resistance. Let's see, where was that? This one. If we're using that same resistance over there, then maybe we get, one or two more drives, maybe like this right here, and maybe this is the final one, or maybe we even break out of that. I don't know. But yeah, this choppiness down here was more in line with this one over here. So yeah, we could just be on the first drive and there could be a couple more to go. Maybe the 5-day and the weekly will end up playing out to the top of this channel. And maybe that's just what we're doing, just playing out this channel, almost like history repeating itself from back here. Just we started from a lower position and we're just scooping up. And maybe the top of this is going to look very similar to this. Okay, just a hypothesis. I'm just thinking out loud. That doesn't have to be the case, but we can see by our volatility that the 5-day and the weekly are not done yet. Okay, guys? So yes, the daily, the 2-day are done, and the 3-day is getting exhausted, but the 5-day and the weekly are telling us don't get too bearish yet, guys. Don't get too bearish. I'll let you know if I see that, but I just don't see it yet. Maybe a pullback. I just don't see too much bearish yet. And if we do go over to the stock market, let's just see if we see anything interesting going on here. Hmm. Well, the stock market is a bit different. Let me get out a log. Let's see, because we do have this channel going here, which I have shown that has been very supportive in the past. We've just kind of bounced off of these weird diagonal growth lines, and the market has been very consistent. It did lose it during the virus era. It did lose it during that 2018 kind of mini crisis thing. And then we got a little bit of a chop as we were healing and as the Fed started just injecting unlimited money into the system, broke out of the channel. Jerome Powell started to deflate the bubble. We got a little bit of exuberance here, broke back down. We basically tapped the bottom of the channel, kind of confirming our previous high prior to the virus era. And then we just pumped up in this channel normally. And, we could essentially just carve out a path on that top of this channel, which could just end up continuing to take us up, right? And then maybe we just take out these liquidity zones before something in the market, crashes us back down, maybe to the bottom of the channel or something, or maybe even to this lower channel, which, it looks like it gets tested every once in a while. So that could also be possible in our future. But right now, I would just say we've broken out of this macro downtrend line, right? The supply line, at least. And we are working on something else. And maybe this is a little bit of a bullish channel for a while, okay? Maybe we even hop on top of it and get a little exuberantly bullish. But if we just do this, okay, I mean, we had a bull run just kind of chopping along, right? In crypto. So if the stock market just chops along, does its little thing, then crypto could continue to run. Okay. So I don't know. If I look at this, I could perhaps, see us pulling back a little bit, just like we did right here on this wick. right? We had a nice pullback right there. Maybe we just come down a little bit, grab a little bit of this liquidity. We grabbed 50% of this liquidity, which is pretty normal. Maybe we just grab 50% of this liquidity and then continue to shoot up. And if my channel, which I've shown is pretty reliable, has anything to say about it, then we should be pushing up to this 41,150 area, maybe even trying to take out this wick at 4180. And should we get above that, this could be exuberantly bullish and maybe even take us higher. But I don't want to jump the gun on that. To be honest, I'd rather we just do, a little choppiness and continue to grow. That would be awesome. Maybe we reached the bottom of the market. Like I said, I now believe that we entered a real recession, not the technical recession that we had last year, but I believe that we entered a real recession winter last year, and that would be consistent with this bottom that we put here, because the market often leads, often starts to turn around at you know, at the onset of a recession. So, I mean, yes, there could be earnings reports that bring us back to the bottom of this channel, but maybe we're going to start a path forward, or maybe do a double top before we come down with some major crash or something. I don't know. Okay, we are now in uncharted territory compared to the last entire year. Um, there's lots of stuff up in the air to be thinking about, and yes, you can have stock markets increase during, during a recession. It just you just have to see the right classes of stocks increasing for the right reasons. Okay, so maybe there's a significant amount of jitter that we're going to experience, a lot of volatility, because some of the stock companies may be over exuberant, some of the tech companies may be over exuberant, um, and I don't know. I'm just trying to think, what would be the bullish case here? Uh, I don't know. I'm trying to make a bullish case, but in reality, I do expect that we just kind of come up here to, 4150-ish, 4180-ish, and maybe we end up getting rejected there, and maybe this was just a bull trap, okay? Should we get above that, then I do see this inverted head and shoulders, which I've shown you before, which I do think could end up taking us higher, significantly higher, okay? So it just I don't know what could happen, but maybe the Fed does a pause later on, right, and stops increasing interest rates just temporarily, just to see how the market reacts. Maybe a real recession is measured by the Fed, and so they decide to take a pause. Not sure, but we do have to be open-minded that something bullish is happening in the market. And yes, it could be an epic fake out, but not everything is fake. Okay, not everything is fake. When we saw this, when we see a low being put in, we can trade up, right? When we see a low being put in, we can trade up. When we see, a lower high being put in, we can trade down, right? Lower high, we can trade down. Not everything is fake in the markets, right? So sometimes, you may just be addicted to shorting and you don't see the bullish opportunity in front of you. And I think a lot of people are that way. Um, yeah, sorry for this to be a little bit of a rant here at the end of this video. I'm going to close it up there, guys. Just be open-minded. Don't be a perma bull, but don't be a perma bear. Just be a clever little alpha monkey. Again, Bitcoin looks really good. Crypto looks really good. Obviously, we're past due for a pullback of significance, which we usually get really nice pullbacks. These are very shallow pullbacks. That does suggest bullishness. And even if you bought low, however, just understand that things do come back quite regularly in markets. Okay, so don't take it for granted. A move of this size, that's usually the limit of even the most bullish moves that we have. That's usually a limit before a big pullback. Yes, we can push up a little bit more, But guys, I'm just saying, make sure to take your profit. We're still in a macro downtrend. Okay, just because we broke the supply line, it doesn't mean that we're not in a macro downtrend. This high is still lower than this high. Okay, still lower than that, lower than that, lower than that. And so you don't have to be loyal to your coins. Okay, they will not be loyal to you. It's up to you to make sure to take profit on your way up, so that you're not just bag holding on the way down. And again, guys, put food on your table, right? And just don't get stuck in any one type of mentality for too long. Otherwise, you're going to miss your entries, and you're also going to miss your exits. Okay. Um, but yeah, just kind of neutral here. But you can see this structure. Nothing wrong with that. That is a healthy structure. Maybe we even go sideways for a while. You can see this is kind of like the opposite of this, and this just went sideways for a while. There's no reason we have to dump to hell. There's no reason that we have to just shoot up, right? Maybe there's not enough liquidity to shoot up. But at the same time, maybe people recognize this as a possible bottom and they don't want to sell, right? So, yeah, it looks good. That's the daily. Let's take a look at what the weekly is looking like. And the weekly, just, it has that really interesting kind of look to it where it is squeezing to the upside. And you would almost expect that it should get to that $25,000, $26,000 area. Uh, just this is a pretty heavy candle that it's wearing right now. But, we've had those kind of heavy candles before and it still ended up pushing up further. So I'm not that bearish, guys. Just not that bearish. All right, let's wait for February 1st and the Fed's decision before we determine any type of particular outlook. Until then, we just trade the chart setups. Things look pretty neutral. You know my key levels to watch for Bitcoin as the leader in crypto. That's your alpha for the day. Stay safe and happy trading.